Hey, what's going on, everybody? Hope you're doing well. Lamont here, filling in for Dan, who is filling in for Lori. You'll have to excuse the lack of webcam. I'm still on my mobile setup after getting caught in, disaster in Asheville. So, without further ado, let's just get into this here review so that I get back on the road and hopefully get home tonight. So, starting off with SPY here, and these buyers are continuing to essentially press the issue here, staying very close to the all-time highs with very, very healthy consolidation. So really what the market cares about right now is whether or not these buyers can maintain over this 919 to 925 structure. As long as they're holding over the point of control of it at 570.52, then the structure is being affirmed as demand. You can see today that the point of control was lost off of the reaction of Jay Powell's speech, and however, the value area low of the structure held, and then we closed pretty much at the high of the day. So the buyers are again positioned really well. So basically what Jay Powell said was he reaffirmed the sentiment that the economy is doing okay from their perspective, and so that means that we're now currently in a rate cut cycle with a strong economy, which is the ideal scenario for a rate cut cycle. If the Fed was forced to cut rates because the economy was in bad shape and they had to, repair it, that would not be good for markets. But if the economy is still strong and we're in a cut cycle, that is good for markets. So essentially, as of right now, that continues to be the ruling reason what the market should be focused on. And we do want to stay mindful that there is economic data later in the week. I think we have jobs data on Thursday and Friday, so the market should care the most about jobs data because inflation has more or less calmed down. The Fed is pretty confident that they can even reach their 2% target. So we shall see. That's the fundamental outlook. And from a technical perspective, it does affirm that. As of right now, the market still is very resilient. So we continue to monitor all-time high resistance 574.71. And that is that's really it. That's all they care about for the buy. So moving on to the Qs here for QQQ. Again, it's a very similar situation. There's just some relative weakness. So whereas the SPY and the ES, they're already at all-time highs, trying to hold back test of the prior all-time structure. QQQ, the tech sector, still has this all-time high supply from July 5th to July 16th. You can see how last Thursday's session, the high of the day was made pretty much right off of the value area low. And then throughout Thursday and Friday, the low of the day was made off of misses of backtesting the value area high of this key demand zone. And today's low of the day was right off of that point of control. If you're interested in trading with a whole bunch of traders in a big old community, as a team effort, then check out our community. Links in the description below, because we did discuss this today. Here we were talking about this. Okay, the next seller objective is this 482.90 level, and you can see we pretty much kissed right off of that level. And then after that, if the point of control does hold, then we were watching this 485.39 level. If we zoom in, you can see how the buyers stalled at this 485.39 level for pretty much an hour plus before finally closing strong into the end of the day. So if you're interested in trading alongside 1,000 traders or so, then check us out. Links in below. That's pretty much it. So for the Qs now, as long as this structure is holding as demand, then the buyers are going to be continuing to eye the test of this supply over here. So if these buyers can remain constructive heading into the rest of the week, then eyes on 490.73, eyes on 493.83, and remember the key downside reference is going to continue to be this 482.90 level. This structure is being affirmed as demand as long as buyers are holding over. Okay, again, that point of control 480. Oops, that ain't it. Moving on to IWM. So IWM was showing us some relative strength in the beginning. However, by the end of the session, a bit of a laggard, not over yesterday's high, whereas just the SPY for this was, but not over yesterday's high like the SPY is. So showing some relative weakness, but bigger picture, this is actually still okay, because what we really care about right now for the IWM is this guy way back when, from November of 2021 into January of 2022. This is the key supply that's trying to be resolved right now. You can see that this supply was problematic for these buyers over here. And then once these buyers got over the point of control of that structure, trying to affirm it as demand, they defend the point of control over here, but they fail to advance. Then they fail to hold over it, come crashing back down into this lower demand zone over here. No acceptance, back over it, try to hold the point of control again. Lower lows. This time the sellers make less gains. Again, they make fewer. They don't advance as well into this 2021 structure, which is this guy over here, this guy, which made all the lows of this big old supply. And then finally, we're back over here, trying to hold over the POC of this key structure again. And you'll notice that this session on Wednesday, they actually failed to come down here. And if you're curious about these trade zones, they're shared in the weekend update videos. I think we have one more as well. That's weird. We should have had another trade zone there, but oh, you know what? It's probably on the there we go. So all of these trade zones are covered in the weekend update video. So if you're interested, check it out. So it's a very notable failure for the sellers to not touch down on this point of control over here, affirming that structure again. Structure as demand. That being said, it's also notable that the sellers defended against the value area high, but we have to give a slight edge to the buyers because they prevented the sellers from getting to their objective while the buyers did get to their next objective here. So potentially setting a daily higher low here at 218.58. Got to break 221.59 tomorrow in order for us to have confidence in this daily higher low being set here. All right, so that's pretty much it for IWM. And then moving on to Bitcoin. Okay, so for Bitcoin, what we really care about is this structure sitting at the 2021 highs. This is the prior all-time high structure. As long as buyers are holding over 61003.36, which is the point of control of that structure, then that structure is being affirmed as demand. So you can see right now that the hourly 4-hour is flirting with being oversold. So if they were to crater down to test this point of control while getting the hourly and the 4-hour extended, that's a pretty reasonable place to be looking for buys. Especially if what you see is something like this, where you come down, get the hourly and the 4-hour extended, break this point of control, don't see follow through, move back over at 61003.36. You can buy that move back over it, throw your stop under the low, and try to get back to this value area high, try to get back to this prior all-time high. Pretty reasonable play for Bitcoin. I haven't really done anything in crypto personally, but you know, if you are trading, I think that's a pretty reasonable setup. Pretty much looking for the opposite of this, or the opposite of this, or looking for essentially repeats of this. Guy. Alrighty, so that's pretty much it. Otherwise, you know, there's not really anything going on with Bitcoin. It's just in this forever balance. But you know, you have to call it for what it is, right? This is still very healthy consolidation. It's a red flag to break to a new all-time high and not see any follow through. But at the same time, you also still are finding a lot of acceptance again over that prior all-time high structure. And this move has not yet been negated without a move back under 31862.21. So while the buyers are not advancing well, at the same time, the sellers have not negated this move yet. So I continue to maintain that this is very healthy consolidation. That's pretty much it for Bitcoin. Moving on to gold. So for gold, blue sky breakout mode, daily consolidation is underway. Lots of space for a daily higher low over 2572.5, and this daily no change level is at 2627.2. As long as these buyers are holding over 2627.2, well then obviously they don't negate the change of this breakout, and this consolidation will remain healthy. With anything over 2572.5 being good for a daily higher low in gold. This is obviously not the high anymore, so that should go over there. And that's pretty much it. So buyers, you know, you're pretty much looking for backtest plays here, right? Just, you know, traders do what works until it doesn't, right? So we don't know if it's going to continue to work, but we make these plays as long as the context is the same. And because this is in balance and breakout mode, something like this is very reasonable for gold, right? Basically looking for a repeat of what happened here, right? Because how did this low get made over here, right? This low over here, just a back test of the highs of this demand, right? What about these lows over here? The back test of the high over here. You know what I'm saying? So very reasonable to be looking for a back test play over here for gold if you're scouting for that daily higher low. Moving on to oil here. So for oil, really there's no change ever since 2022. It's being contained by this demand zone and this supply zone. Multiple highs off of this supply zone here and over here and over here and over here. Multiple lows off of this demand zone here, here, and now we are in the present day where the demand zone is trying to support price again. These buyers have to find acceptance back over 71.46 in order to negate the change of this most recent breakdown. So for what it is, the sellers are positioned as well as they ever have been to make an attempt at cracking below this daily demand zone, which would be meaningful change relative to all the trade that's occurred since 2022. Okay, so the goal for sellers is to get under 64.75 in order to affirm this structure as supply, and it's very notable that so far the sellers have failed to touch down on the level. That being said, this daily lower high potentially being set right off of the value area low of this local area of demand. So this guy over here was supportive of price throughout all of here, You can see how two major point of control holds very recently. There was one back here as well. Value area high was being defended as well. So the goal for these buyers now, get back over 71.46, which is pretty much the same as getting over 71.63. Doing so would greatly increase the potential that we continue to see further balance within this big old range that the market has been balancing in. So that's pretty much it for oil. Nat gas. Okay, so for nat gas, this is actually quite notable, right? So for nat gas, this is the key supply in the way. For nat gas, you have all this demand down here. So bigger picture, even if sellers were to enter the market, if you cannot find acceptance back under this guy, these buyers would still be constructive relative to all of this demand that they created here. Daily higher low has been established at 2.720, but I personally would not be surprised to see further balance within this supply, just because the daily is pretty overbought right now at 75. Weekly is flirting with being overbought. The 4 hour is also flirting with being overbought. So if they were to press a little bit higher, get a little bit more extended here and here, I would not be surprised to see a retest of the lows of this range that's currently trying to be resolved now. That is really it for nat gas. And then finally for the dollar. So the dollar, very similar to oil, right, where you have this key demand zone, this key supply zone has been dictating price ever since multiple reactions off of the supply zone, multiple reactions off of the demand zone. And again, this trade zone shared in the weekend video, I continue to maintain that this is a very reasonable trade zone for dollar buyers. That being said, without extension, I don't feel as good about the play, but I do feel very confident about the location. So I do think that, if you're a lower time frame operator, taking your shots while we're still testing this area, this guy over here, primarily the point of control of it at 99.80, this is definitely a very reasonable location, because if you do happen to hold this low again, well, what should we expect to happen, right? Hold this low, try to test the highs, right? Hold this low, test the highs. Hold this low, try to test the highs and fail. Lower low, no follow through. Hold it again. Where do they go? They come to here, right? Can't get over this supply. Where do they go? They come test this demand. Can't get under this demand. Where do they go? They come test the supply. So now what's happening? They couldn't get over the supply. Now they're testing the demand. What should we expect to happen then if this demand zone were to hold? We should expect a test of the supply. Okay, so that's pretty much it. And if we were to really quickly just pop into some of these Fangman T names as well, you can see there's just not really that much fear in Fangman T right now, right? Apple is flirting with an all-time high breakout here, very healthy EQ, bigger picture holding over all of this sideways trade, right? So Apple looking pretty good. Microsoft doesn't look quite as good. They do have this overhead supply here, and they rejected from it. That being said, it is still bigger picture. It's just kind of trading sideways, so really not a big deal. The idea is if we can continue to see this rotation within tech, then that'll probably keep QQQ happy. And NVDA, also looks pretty much like Apple. If anything, it looks better, right? Because you look at the longer term charts, of course, NVDA, it looks like a potential monthly bull flag here, high and tight, whereas Apple has had a lot more back and forth leading up. So as long as NVDA can stay strong, Apple can stay strong, and Microsoft is really, honestly, looks fine, especially on the monthly time frame. These are the generals, of the tech sector. So if these three can continue to kind of take turns, pressing to new highs, consolidating, pressing to new highs, consolidating, then the tech sector is probably fine. But, again, the jobs data later in this week is going to give us pretty good information. If we get jobs data that starts to decline, starts to show a weakening jobs market, that is going to put a damper on the Fed's soft landing thesis. So we'll have to, pay attention to that. Otherwise, there's really no red flags out there for buyers at the moment. All right, so that is pretty much it. I have no idea when Dan will get back online. Asheville it looks like a war zone right now. So, you know, heart goes out to them and hopefully get their footing sooner rather than later. I know Dan has electricity now, but I don't think water has been turned on yet for the town. I don't think he has internet. So stay tuned. I do appreciate your patience while we sort through this disaster that has pretty much taken out half of our team, including me. I'm not home yet. So yeah, that's pretty much it. Again, we appreciate you tuning in. Thanks for sharing some of your time and energy with us. If you could hit us with a like and subscribe, we would appreciate that very much. Otherwise, hope you enjoy the rest of your day, and I hope to see y'all soon. Farewell.